All right, let's expand this conversation with our guest today.
Got Roggy Horner on the line. She's the managing director of futures trading over there at Simpler Trading. And when we get all worked up like this, it's always good to bring in a calm,
Yes,
smoothing
please,
voice of reason. Calm down, guys. The end of the world's not coming.
please
And
help me.
that's a pretty big responsibility. I'll turn it over to you, Roggy.
With great power comes great responsibility. So I am great to see you all. Thank you for the world's worst lighting today.
Oh,
It is an interesting, I was listening to you all and I think back on seasonal trends, and I don't know how many of you guys look at the seasonal trends, how many of the audience looks at seasonal trends. The last 5 years, by about September 16, we start that move lower. So August is absolute chop, range bound, and August did exactly what August behaves like historically. July did exactly what July was supposed to do, which is straight up. So we come out of July thinking, yay, we go into August and we need a Dramamine. We come into September. So the last 3 months have absolutely organized exactly like the seasonals of the last 5 years would suggest. And I'm looking at, so the question is, okay, Rod, great, but where's the reprieve? So if about the 15th to 16th starts that move lower, we are not going to get a reprieve until the end of the month, likely October. But if we think about the phenomena, for me, I look at Q3 to Q4. Now I'm thinking I'm an asset manager. I've got however many millions under management. I've got Q4 to look like a superstar. I start buying stuff that's cheap. I start buying stuff that's on sale. And if you look at the seasonals, once again, we'll chop around in October, but we actually start to rally towards the second half of October and into November, where we chop around some more. But I'm actually looking for stuff to go on sale. If this is what September normally is like, great. Where are the blue light specials? How can I position myself with that expectation for the early October rally? That's what's
Roggy,
going through my head.
Roggy, how do you not be too early? And that's the issue here is, we've got stocks in the last couple days in a little bit of a free fall here. I mean, Amazon's down $10 in 2 days. So this is
Mm-hmm.
a serious sell-off. Obviously you've got other stocks that are down too. Microsoft had a terrible day yesterday. Key reversal, stock goes down, $12 in 24-hour period here. How do you not be too early, or do you just, buy and you take some heat and, eventually we're going to pop back up? That's my concern is I'm kind of with you. I think eventually it's going to be a great buying opportunity here. Timing that, sometimes really difficult.
You're so right, because I love that you said too early, because too early is the same as wrong, right? We like to
True.
talk about early and late. So how do we make sure we're not on the wrong side of this? So I'm going to look for two things. Number one, if I'm going to buy anything on sale, it's got to be above the 200 period. It's got to be, because that sentiment shift along the equator, if you think about the most common types of scans, and I'm, as much as we want to complicate technical analysis and charting, and I've probably been guilty of that too over the last 35 years. But at the end of the day, there are some really basic places that I look at on a chart. Am I above or below the year's point of control? Am I above or below that 200? I prefer the exponential, nice recency bias built into that math. Uh, I will not buy stuff just because it's cheap. So how do I prevent being too early? I can't start buying until early October. And how do I prevent being sort of too early and wrong? I can't buy stuff below the 200. And that served me. And then I remember, look, when people say, oh, the market's rigged. Yeah, it's rigged to the long side. And you're exactly
Sure.
right. If we start to see that meltdown, right now when I look at Fed fund futures, I know everyone can look at that right here, CME Fed Watch. We're not even seeing a 50-50 shot at a rate cut until July, which is bonkers. It was closer to March, May, not but 6 to 8 weeks ago. We're going to see the Fed fund future start to put the screws to Jerome Powell and say, look, this is what we're expecting, and this is how we're communicating it to you. You got to cut sooner. We get you're not going to cut in 2023. That was never really a probability. But now you've moved it out to July, and we're ticked off, and we're going to let you know.
Rocky, I know you've had some nicknames for Jerome Powell. I called him Pumping Powell for a while, and I know you've kind of played on that theme similar. I mean, come on. I mean, the guy's to me, he's in between a rock and a hard place, and the position he's been in since 2016. What would you do differently if you were head of the Fed?
Oh my gosh. It's so easy to mock Powell. I actually don't have a problem with him. I think he learned. And if I look back on Powell versus Greenspan, don't get me started on Greenspan. Yellen did what she did. The Bernanke did what he did. But I don't have a big problem with Powell. They have a very difficult job. My job is, unless there's Powell futures, I can't trade him. So what I'm going to remember is until he gives me his S&P target, which ain't happening, I've got to remember 2019. And how many of you, before 2020, 2019 Q1 was when Powell in Q4 went a little too far. He hiked one more time. He defied the Fed fund futures. I don't think he's going to do that again. He remembers really clearly what happened when he hiked one too many times. And then he uttered on, what was it, one of the television stations where he, Bernanke, and Yellen, and he uttered the word patience. And that was the bottom. I don't think he's going to defy Fed fund futures again. And I think he learned his lesson back then.
All right. Now, of course, one thing that I've been seeing is the consumer starting to slow down. Are we just now getting to the recession that everybody says, well, at least most are saying that we already passed?
I'll tell you what, my friend Mitch, what the heck's a recession anymore? Because we had one, really, if you look at the GDP from quarters and quarters ago. So what's really interesting to me is that word now means nearly nothing because none of us know what it is. Before we had a measuring stick. I will say that's probably one of the oddest things Powell chose to do, which is somehow redefine what a recession is. So now it's whatever they think it is. I don't know. So that's one of those things that our word doesn't mean anything because all four of us, what is it? I don't know.
One thing that I would mention is that they're saying they're data dependent, but it seems to me more like they just can't analyze the data that they have.
The data that they have is very interesting, right? We look at the models, and if anyone wants a really good laugh, and I know you guys know this, Google the difference between CPI and PCE. Even better, go to ChatGPT and ask, hey, what's the difference? And you'll realize, if anyone hasn't done that, and for those of you that have, PCE is what they use for their models, personal consumption expenditure. And if that PCE is the real world, it ain't Earth. It ain't the world that we live in. CPI is a little bit more reflective of that. So we think of what their models are based upon. We can see why their numbers seem a little bonkers and their opinions seem bonkers from time to time. So I look at it that way. That's what their models are built upon. I can judge whether that's good or bad, or I could just trade it. And at the end of the day, I don't get paid for judging. I get paid for putting on a trade and being right and managing risk. So I try to remember that and just keep slogging through this mess that we have.
Ruggie, I want to take it back to something you said just a few minutes ago here, and you talked about not buying stocks below the 200-day. And I mean, that's such a good tip here because it stops you from ever trying to catch the falling knife. So you're never, ever trying to catch a stock when it's going straight down, correct?
Right. So there's 2A. So let me add a little bit more to that.
Yeah,
everything's time horizon. I find whenever there's a disagreement amongst traders or whomever, it's a difference in time frame and time horizon. So if I'm talking to someone looking at a 1-hour chart with a 2-day time horizon, my take on, say, a daily or weekly is going to sound bananas. So when I talk about a 200, it's on the daily. The other level that I like a lot is the 200 on the weekly. So if we come down and meet the 200 on the weekly, I have probably built over the course of 3 decades. That's probably my most common trigger when a weekly chart is at least either choppy or in an uptrend and meets that 200 on the weekly. Again, exponential. So you're absolutely right. I don't want to buy stuff south of the 200. And if we want to add another layer of that, so that's just price, right? What if we add something like an anchored VWAP? What if we start looking at volume-based levels? So if I can add those two things together, price and volume is the only way to coattail the money, right? Not price. I want to know what the size is. I'm never going to be there first. I just need to make sure that size is there and I'm going to coattail it. So those are the two things that I found work best for me in any kind of environment.
Yeah, Rocky's the one that gets all the meat. That's because I'm the one that always tries to catch the turn. I take that first bite. And then I get out too soon, and I leave all the easy money for Roggy, man. I gotta start being more like Roggy.
Hey, I'll tell you what.
You're always take the first bite of something. We leave all the meat. We leave the meat to Roggy.
Hey, but when you are right, your risk reward is going to be far better than mine. So I will say
don't know.
that.
The risk is high when I call those turns. The reward might be pretty good sometimes, but when you're trying to call a turn, the risk is super high.
That's just in our blood, man. Trying to
I'm
call.
a turn trader.
Yeah,
It's
but the,
different.
the best thing about Dennis is what he and for shorter term trading is not if he's long something and he catches a turn, he'll flip into a short. And that is like, for me it's like, oh, I was long, I shorted it, now it's still going up. Oh, I should have stayed long. And that's ability. But this is a really interesting discussion we're having here because on Monday we had Tim Quast on and he shows us his different filters. And he had no stocks in his momentum filter. There
Not
wasn't
one.
one single stock that was in his momentum filter. And he said, that's sometimes a sign that, there's no momentum in the market. I'm going to flip this to you. Like how many stocks are in that 200, weekly moving average range? Is there a big universe? Is that something you research on the weekends? Because I'd be interested to know how many are in there.
So I was looking at XLF this morning, right? I heard y'all talking about banks. If I look at XLF, and that's going to map to the Dow, right? Because the number one weighted sector in the Dow is not industrials. It's not transports. It's the financials.
Yeah.
XLF is below the 200 exponential, but above it, but the KRE is below it, and it has been for the year. I don't think the KRE has been above the 200 since probably Q1, right?
Yeah.
So now that's going to make me think about where does KRE affect? Well, I can't touch the Russell to the long side. So I've got to leave that Russell 2K alone. However, the Dow, as long as the XLF is above the 200, so it's going to direct me to a group of stocks. So now I'm looking at DIA. Now I'm looking at XLF, maybe JP Morgan versus I can't do the same thing on IWM. I can't do the same thing on KRE. So I try to think about the composition of the indices, get down to those top 3, top 4 sectors, and then I'll look at the top 1 or 2 stocks. So as far as when I scan this, I'll scan about 4 dozen names over the weekend. And I like to look, I'm old school. I mean, I'm back, and I know a lot of you guys are. You remember looking at paper charts. I remember getting paper charts in the mail. I love it. I used to friendly up to my post office so she'd come to my house first and get me my commodity price charts back in the day, those giant, So I still like looking at the chart. I'm not a big fan of sort of scanning the universe of technically similar symbols. I want to look at weighting because we live in a high concentration world.
I remember going down to the convenience store at the Merc. I didn't buy it every week, but maybe every 2 weeks. The technical perspectives, I think, is what it was called, and it was these thin pieces of paper, and with all the
I want to
different
show you
charts.
something right here. Here, I'm going to show you up at the camera. Here's I got some of these old ones from my friend. This is 1971 Quote America.
Oh,
and look at all the charts they got.
Awesome. I want to cry a little bit. That's fantastic.
Yeah, this is before computers and the internet. So he was a trader. He's passed away. He was an older gentleman that actually lived beside me. And he's like, when you got these in the mail, he's like, this is the holy grail.
You got bookmarks.
He's like, and he takes them and he would draw, he'd draw the lines and he'd extend the charts. Like, I got a whole pile of these. He gave me all kinds of these things.
All us new kids right now are just like, what the hell is going on?
This is how it was, man. Before, this is how it was. These
ruler,
paper charts, and you got these.
Pen.
Friday,
I don't know if I would have
once a
survived in
week
those
these
days.
Came. This was your weekly chart book. So
I'm feeling weepy right now. I'm feeling some kind of way.
Subscribe to that. Look, we can even subscribe. Here's to fill it out. Publish weekly. There you go.
Oh.
Look.
All right. So, Raghi, what should we be maybe looking here on pullbacks? Of course, we don't need to be looking at it right now, but at least just what is on your mind as we get in this deep pullback? You're going to start maybe thinking about later in the year, but what's on that outlook?
Let's just survive to end of quarter, right? Let's just keep it short term. To me, it's a 1 hour time frame or less, or even better. I've been day trading, 5-minute time frame, get in, get out, be done by lunch, because I don't trust follow through. And even if it's heading lower, short squeezes have been brutal. And if we're going to see a short squeeze, it's going to be that Q3 to Q4 type mentality of let's buy that stuff on sale. Let's have possibly the best ride higher into Q4. At the end of the year, I can show, again, I'm thinking about how money would behave. Are they going to sell into the end of the year? I don't think so. They're going to look for some bargain hunting, knowing that we can really press Jerome Powell with Fed Fund futures. Look, we want our cut back in March or May. So that's what I'm really looking at. Those are scenarios. Unless I see evidence of that in the data, in the Fed Fund futures, and in price action, that's all an idea that I've got to wait for an actual validation of. But keep it short term until the end of the quarter. Start bargain hunting in the first 2 weeks of October.
I'm writing that
Okay.
down. Bargain hunting first 2 weeks of October.
Let's go
Okay.
shopping.
All right, so we're going to
I'm
end
ready.
I'm going to end this segment here in a little bit different fashion, Rocky. Okay? Something I've never done before. Okay? So I know those are real books on your bookshelves, right?
Oh, yes.
Yeah, because I've been fooled by people.
No,
that have
it's a
the-
Google Meet. It's a
Yeah.
it's a green screen behind you.
Okay, and so I know that you probably have a lot of financial books up there, right?
No. No.
Okay, all right, because
I
okay,
think
okay,
maybe 6 or 7. Maybe six or seven.
Whoa.
Okay, I know. I'll take a guess who you have a book in there, and I can guess an author that people won't recognize. Are you ready? Dara Torres.
Oh. Dara is actually one of my best friends. So
You're
yes,
kidding me.
I've got, her and
You're
I have been
kidding
very
me.
good friends for 20 years. Yeah.
You're kidding me.
No, I've got one of her books on my shelf. She was so ticked off. She came over and said, where are my books? Who is Schaubacher? Who is Wyckoff? Who are these guys? Where's my book? She said.
She said, you better turn mine and make it face forward. I don't want that, just the binding showing there. That's how you know you really like a book. You turn it around, right? And show the
There
cover.
you go.
Well, you can tell her that I'm just an absolute huge fan of hers. And if you guys don't know who Dara Torres is, then you've been living under a rock. She's a 12-time Olympic medalist and former world record holder in 3 events in swimming, in sprinting and swimming. And if she would offer me, just because of our friendship, a few swim lessons, we could even do it virtual. I would really appreciate it. So I was really worried I was going to lay an egg there, Rocky, but you came up with the save.
I will let her know. I'll pass that on.
Okay. All right.
And here, so you guys could at least get a little connection there. Look at the gold medals. Appreciate you guys.
Wow.
She
It's a
did
lot
it
of
in her
gold.
40s.
She has long gold.
She
What's
did
the
it
most exactly?
in her 40s.
She's the
41.
oldest team. Yep, she's the oldest, 41. Yep, and she tried to make the team again at 44.
Wow.
Yeah.
That's really impressive. Being a guy that's trying to play some sports at 32, I couldn't imagine that. So definitely appreciate you like always. You guys check out Simpler Trading. And I also love the morning conversation that you guys give. If you guys haven't checked it out, definitely get her Twitter. Raghi does a nice little morning recap for you guys that you guys can definitely check out. Always good to have you on, and we'll keep bringing you back. It's always
Thank you, my
a lot
friend.
of people's, you get a lot of love from our chat. I will give you that. I think personally, I need to start taking some statistical data, but I think you might be the most loved out there right now.
The feeling is mutual. I love the energy. Look, anyone who's getting up, sit with you guys, trying to be better at this game called trading, absolute respect. I love retail traders risking our own money, making our own decisions. Mad respect.
Like I always
Mad
say,
respect.
real recognizes real. Appreciate you coming on.
Thank you, guys.
All right, let's get back to the market. How we looking, Joel? Still